you know, use it for yourselves anytime that you need. Now, obviously, this was a trade that I was already looking to probably get in. I don't know how long ago, and it did create that resistance as you guys saw. So, you know, without going into what I normally do, starting off on a weekly time frame, let's say that we were ready to trade, right? We're ready to trade, and at least on the hour we identified that, you know, we're in an uptrend, right, guys? We're in an uptrend, but we're pretty high in the market to say that, man, yes, I could in theory enter here and only, you know, ride it up to maybe this level of resistance, or you know, a little bit beyond that. But again, you're still playing a dicey game if you're not pretty much being patient in the market. So guys, what Fibonacci allows us to do is to pretty much get accurate entries. You know, you won't be perfect all the time, guys. I mean, perfect is really overachieving, to be honest, in this market. But you will be in the ballpark area if you allow patience to ensue, right? So if I was looking at this, I have to do Fibonacci in the direction that the market is traveling, guys. So the market is traveling up, so I have to start from a low point and raise my Fibonacci up to a high point, guys. Now, mine's is customized right now, guys. So when you normally start off with fibs, and I'm not gonna, you know, show you guys, when you normally start off with fibs, it'll actually be highlighted or have some colors behind it. You pretty much can take those off. It's pretty much as simple as this, guys. Let me pull mine up. So if you went down, and, you know, I'm gonna let you guys see the parameters here so you can use them. These are my own parameters that I use based off of experienced traders, people that I've come across. But this is generally normally what any trader is normally looking at, guys. So yeah, there's other parameters out there such as 88%. You know, what else is out there? I think, well, you could actually use a 25%, but most traders, guys, when I got introduced to this, these were the parameters that I were introduced to, and it hasn't failed me. If I was patient, you know, I saw like, oh man, this thing came towards a 618, or this thing came, the market came, you know, towards a 786, right? So for the background, all you would have to do, guys, is turn it all the way to opacity. All you would have to do is turn it all the way down, guys, as you see, right? That gets rid of the distractions that you have, right? So, you know, everything for me is pretty self-explanatory. My levels are set into percentages versus values. I mean, if I wanted to do value, I could just say 382, but it's really the same thing. I just like to show the percentages for my teammates, guys. So for my students that I'm showing the charts to, guys, I like to use percentages because it helps break it down basically like a pie chart. So USD CAD, right, guys? If we were looking to get in this trade, right, we have to understand what each of these percentages mean. So within the 382, right, the 382 is normally a shallow retracement, guys, right? A shallow retracement. So with it being a shallow retracement, that means that the market is not looking to go up very long, or whatever direction you have, right? Shallow retracement or shallow retest. You know, if you guys aren't familiar with retracement. Let me add, yeah, I'll take that, a little bit of yellow. So a shallow retest, right? So in theory, guys, if we were looking at Fibonacci to pretty much, or, you know, to USD CAD to make its way down to this percentage, right? And price would actually start, you know, showing us that it doesn't want to doesn't want to come down any further, maybe give you a fake out like this. Yeah, in theory, we can have something just like that, guys. You know, obviously I just kind of drew it. That is not what may actually happen, but if it did, we would be prepared for it. All we would have to say is that, okay, as long as price closed on the same time frame above it, and it could dance around a little bit, I can be confident to say that, okay, I'm looking to enter at this market at the 382, which is a shallow retest, guys. Oh, wanted to get that out the way. So a shallow retest, right? Now, that's not necessarily saying that the market is going to come here, but if we know that at least our exit point, if we're looking at this market and, you know, we're practicing proper risk management and we're not being greedy in the market, in theory, our exit should be pretty much right around here, guys, because it's shallow. That means that up here, if you look at it, there is resistance. Price could play off this resistance, guys, and now you put yourself in a bad spot because you probably entered, you know, more than once. You probably did a higher lot size, something like that, guys. Now you're pretty much held hostage because what happened is that the market did respect your move, right? It did respect your move, but let's be conscious of this. This is USD CAD. We know that price doesn't move like aggressive like that, or make a lot of pips in, like, you know, a day's time frame, or, you know, a week's time frame, guys. It could take this move forever, you know what I'm saying, just to reach 82 pips if this was the move, guys, right? But obviously, if it did that within the same day, within a half a day, it's probably affected by news. But let's not get too deep into that, right? So say you made your exit, right? You got your pips. You know, you went up 82 pips, man. $82 on a 0.1, 180, $820 on a standard, guys. $8.20 on a 0.01. But guys, this gives you an opportunity, a second opportunity, because if you're the person that said, man, I'm gonna follow because this doesn't seem like price is gonna push it that high, and it could push it a little bit higher, guys. So you could have a scenario like this. Okay, all right, if we're all right, so if we're retesting, you know, you can have a scenario like this, and it comes up here. But guys, this is what could potentially happen. This is what trap traders in. They see that it's still rising and they're like, man, I'm about to hold this thing, or I'm not. So I'm about to put my stop at break even, or maybe I don't even put my stop at all because I'm still a newbie. You know what I mean? I still don't have enough respect for the market because I ain't get my ass whooped enough, right? So it'll give you one of these numbers. You think it's a break and retest for this resistance, and then the market pulls it all the way back down, either Monday morning, you know, Sunday going into Monday, what am I trying to say? Opening bell, guys, London, whatever time frame this is going to be taking place, guys. If you look at this, this would have been midnight. This would have been midnight if, you know, in theory, price did something like this, which would have been around the time that price starts acting and, you know, responding off of these moves in such a manner, guys. So understand 382 shallow retracement. If I'm going to take the trade based off of 382 in either direction, whether that's buy or sell, I'm going to try to find wherever the first resistance zone at or the previous low. So that way, if this is a trending market, I'm not putting myself, you know, in the wrong direction, guys. Right now, let's go down to 50%. 50%, everybody should know off the top of their hand, right? This is probably like your medium retracement, you know what I'm saying, or moderate, whatever you want to say, guys. Moderate. I'm almost positive I spelled that wrong. Moderate retest, right? We don't have time for spell check because you don't got to be smart to make money, guys, right? Just a little bit. Now I'm gonna have to change that. Yeah, I think that's the right way. If not, man, don't judge me, guys. But anyway, you got a moderate retest, right? Medium, you know, pretty much this should be the area that everybody should pretty much intentionally be looking for. Even if you didn't have Fibonacci, this is normally the area where people can put themselves in the ballpark, you know what I'm saying, of what price is doing, not knowing that price could retrace, but that's the purpose of your stop loss. It could retrace lower, could retrace higher, whatever the case may be, guys. So that wouldn't have been a bad area if this was like a level of support, you know, a true level of support, for you guys to be able to say, all right, I wanted to enter in that trade right here because it's at the 50%. At a minimum, price retest, if it's going whatever direction, guys, it is retesting 38 to 50% of that previous move. So this move already happened. Now that we have price looking like it's coming down, right, guys? So if we're looking at it at the very least, you know, this is true, this is the least, but we, you know, subjugate pretty much the parameters right here to figure out what's going on once price gives us more data. Right here is pretty much, yeah, this is where probably I want to put myself and then analyze the market better. Even if you didn't have Fibonacci, you can kind of gauge it, guys, where the most recent high was at, where the market had the most momentum. This was the most recent high where the market had the most momentum, guys, because after it retested right here, the market shot up. I hope y'all following my cursor. The market shot up, as you can see, right? Hit a level of resistance, 2 points of contact, should bring the market down. Could have a potential retest up here, but this should, in theory, guys, bring the market down. You know what I'm saying? 50%. Even if it doesn't and it shoots up, we still put ourselves at a better position because now we have more data to say, okay, the market was still aggressively bullish, but either way, I still have to wait for a better retest if I'm trying to, you know, put myself in the least amount of drawdown in the most accurate position possible. But guys, so 50%, you should be able to, in theory, eyeball that. You know what I'm saying? In theory, you should be able to eyeball that, guys. I'm not saying you should do that, but in theory, you should be able to eyeball that. Now, when you're looking at 618, guys, that's your golden zone or deep retracement, guys. This is pretty much the sweet spot that everybody talks about, right? Everybody mentions this, you know, within the trading world. 618, sweet spot, golden zone, gold zone. It's illustrated as a gold zone or sweet spot, guys. Whatever you want to laminate it as, whatever makes you feel comfortable when you trade. This is pretty much like you're going to get almost your perfect entry, guys. You know what I'm saying? Almost. So if you're the person that I'm patient enough to see if the market is going to try to come down here, then 9 times out of 10, you have the perfect entry for the most part, guys. Don't confuse me because obviously, you know, conditions can arise, but you know, when the market is showing you that, it'll normally retrace, you know, a little bit below that. And as long as it closed the candle on, again, hour time frame, 4 hour, next candle closes too, you know, or starts to show you that it's closing, and yeah, you have yourself a position to buy at a lower position. So that once was 82 pips turns to what? If we're going to the same resistance, because we're not being greedy. Now it turns to 133 pips. Now let's talk about the 786, where a lot of people are confused, guys, right? Now, there's standards when it comes to looking at this market, guys, right? Or looking at this information and making sense of it. So 786, for example, guys, you have to look at whatever time frame that the market is pretty much still pushing down. So say that I'm looking at it on the 4 hour time frame. If there's no close of a candle, I can't look at it as, oh man, it's rejecting off the 786. So what I normally show people, guys, is that 786, that's your reversal zone, all right? That's normally your reversal zone, right? And what it is, guys, is that in this zone, in this reversal zone, is that if price closes below here, closes at 786 on pretty much like an hour, 4 hour daily time frame on consecutive time frames, and it crossed and it closed below, guys, then you're looking at the 786 to pretty much change the entire trend of this market. Now, the neat thing about the 786 is that, okay, if it has a candle that closes above this zone, this, in theory, this line, depending on the hour, you know, 4 hour, whatever time frame you're looking at, as long as it's within those time frames, guys, you're looking at the market to actually just do an even deeper retracement, almost treating this like a secondary 618, and then push the market pretty much violently up, guys. So that's stuff you have to pay attention to, and everything is just, you know, a keynote on pretty much waiting for more data to unfold. So just because you see it cross is not giving you the green light to say, hey man, let me go ahead and take this entry. You want to wait for further data. Now that you have the cross, you're like, okay, let me wait for further data. Let me see if it starts consolidating, playing around this entry. I'll probably wait for a better or higher time frame to pretty much make my confirmation, which would normally be for me like 4 hour. I would definitely like to see a 4 hour reject it, close above, and then the next candle opening up, something like that, guys. So you see 100%, obviously we know 100% of the market, that puts us at a new level of support, guys. So pretty much, you know, once the market stop playing around here, in theory, guys, this would be the new area where you would buy. So either way, we have two buy position. Well, if the market, you know, respected this as support, in theory, we have two buy positions. But what normally happens, guys, again, if it closes towards 786, what'll normally happen is that this will be a buy position, right? It'll probably push down, or it could do one of these numbers. It could reverse back to 618 or 50%, then push down to respect the support, or it can straight, pretty much push all the way down, and this becomes the new support. Again, guys, data that we have to uncover when it produces that. It's nothing that you could say like, oh yeah, man, I'm positive that it's gonna do that. Like, no, guys, the only thing you can do is work with what you got, right? So yeah, in theory, this level of support, I could definitely say that, yeah, I would treat this as, a legit buy zone once I got more data, guys. So that's just my time, guys, with Fibonacci, man. I hope that helped just a little bit. We'll go deeper into it, guys, as you catch some of my longer videos. But again, guys, appreciate your time. For all of you guys that are subscribing, that are viewing my content, please, guys, like, share, comment, set the notification bell, guys, so you guys can stay up to date on my content, man. And you guys have a blessed Sunday, man. I'll talk to you guys later.